Hey folks, welcome. Hey, for the first time I figured out how to do that little timer thing on the preview page, on the pre-recording page. And so I see that timer ticking down and I'm getting nervous. It's like, what the hell? Anyway, welcome, welcome. We get to talk about some pretty cool stuff today, so I'm glad you're with us, both in live stream and in watching this recording. I want to make sure that everyone can hear me properly, so do me a favor, say, yep, can hear you. I'm going to type a quick note. Can you hear me? And hopefully somebody there can say, yep, and we can move forward. All right. Nick says you can hear me. So does Juan. So does Anna. All right. Then we're good. Let's do this thing. All right. So this is what we're going to do today, folks. We are going to talk primarily at the beginning of this lecture about Tulip Mania. Tulip Mania may sound like ancient history, but it ain't. Okay. Remember, this is not a history class. We are all about looking at today through the lens of yesterday. And trust me, Tulip Mania offers us an incredible lens, one we need to have on more often than we do. Then I'm going to do just a quick rundown on a couple of the other readings. They're not as pivotal this week as Tulip Mania. And then for the second part of the lecture, I'm going to do a deep dive into the lessons to be learned in Romancing of the Broker. Now, just to let you know, there's nothing in the test, there's nothing in the questions about romancing the broker, or at least other than what I'm going to share with you in terms of what the reading was all about. But then I'm going to do a personal deep dive into the lessons learned from romancing the broker. Not in the test, not in the questions, doesn't matter, unless you're interested in really understanding how to live a healthy, productive, thriving life in the workplace. Because trust me, the workplace is not interested in you thriving. You need to know how to do that yourself. So that's the second part of the lecture. Stick with me. All right, so let's jump into this. Let's talk about Tulip Mania. Oh my gosh. Okay, this thing's amazing. You've probably heard of this whole thing before in the past. But let me tell you a story. This is a true story. Actually, I'm going to be sharing a lot of true stories of where I and my family got hit by this nonsense. Okay, you see that right there? That is Wildcats #1 variant gold cover signed by Jim Lee. None of that had any meaning to you whatsoever. But trust me, if you were part of the comic book bubble of the 1990s, you would know exactly what that's all about. And that's my comic. Now, not that exact one, but I have that comic. Wildcats #1 variant cover gold and signed by Jim Lee. All right. Okay, well, what's the deal? Now, if you're interested in going through a crash course on the comic book bubble here, this video that is available on the PowerPoint presentation, which I will link to the description below. I will link this PowerPoint presentation to the description below because there's a lot of good videos you might want to look at. This video does a super quick rundown of the comic book bubble. But in quick summary, what happened was back in the 1990s, there was this huge, massive renaissance of comic books. Image came about with some, big names in the industry breaking away from Marvel and creating their own comic book label. DC did a lot of variant labels like Vertigo and so forth. They picked up big writers like Neil Gaiman and so on. I mean, it was massive. And they pumped comic books into the system like you wouldn't believe. And they created all kinds of artificial conditions that bring about rarity for comic books. Now, what do I mean by that? Well, I mean, the things that make a comic book book rare are these. First of all, a first appearance. A first appearance of a key character can really push the rarity of, and therefore the price value of a comic book up. Death of a character, and origin stories. Okay, these three things: first appearance, death, and origin stories. Well, what they would do in the 90s is, I kid you not, and first editions. Sorry, four things. First editions. During the 90s, they pumped out book after book after book that were all first editions of teams that you've never heard of, characters you've never heard of. They introduced new characters every single month, and everybody was dying and coming back to life and dying and coming back to life and dying and coming back to life, just so that they could create these false sense of value in these books. Oh, and yes, they changed origin stories all the time. Peter Parker, they changed his origin story. You find out he's not Spider-Man. Then you find out he is Spider-Man. You find out that Vampirella is in fact not a vampire, but an alien from another planet. Okay, I'm geeking out. The point is, they created all kinds of artificial value, and we bought it. I have a whole frickin' basement full of comic books, and they are worth goose egg, zero. That comic book right there, it at one point was going for $300. Right now, it might go for $20. That is a bubble. That is a classic bubble, just one of many that we're going to talk about. However, the way that we're going to first talk about them is with Tulips, Tulip Mania. Once again, this is a video that you might want to go look at. It's very good at kind of going into the details of Tulip Mania. But what it basically comes down to is, back at the beginning, back in the, I don't know, maybe it was the 1600s. I apologize, I did not check the date exactly. In Holland and the Dutch and so forth, tulips became a really, really big thing. Now, why tulips? Well, here's the thing. The Dutch were becoming like mega rich. I mean, these people were like in charge of world commerce. They had their shipping routes, they had commerce going on and so forth. And so they were making money hand over fist. Well, as you know from last week, when you're making money, you need to show it off. Bling, right? You need to show that you're successful and that you're of means and that, all that good stuff. And so we wear bling and so on. Well, for them, tulips were their bling. And they bought and planted all kinds of tulips and so forth. And it created a bubble. Now, again, the video goes into detail, as does the reading, about what created the bubble, but I want to give you a quick rundown. First of all, tulips were rare. Now, you're like, what do you mean rare? I mean, they're all over the frickin' place. Well, now, here's the deal. First of all, it took a long time for a tulip to come to maturity, and then it had a relatively short lifespan. But now here's the main thing. There was a certain virus. Yeah, right, virus, right? No, there was a virus that affected tulips, and it affected the coloring of the tulips. It gave the tulips this cool kind of fiery striation, and so these tulips were particularly rare. And furthermore, that tulip would not pass that coloring on to its children tulips. Since it was a virus, it just affected that one tulip. And so a lot of tulips became super, super, super rare. Furthermore, there was a really low supply of these virus tulips. Remember, it had to catch a virus. They didn't even really understand that at the time, so it's not like they could produce them. And then that tulip could not give its virus off to other tulips of its, its children bulbs, if you will. And so these super, super, super rare tulips were super, super, super rare. So the supply was low, but the demand for these were really high. Because if you could put these in your yard, oh yeah, you're the bomb, right? Okay, so next, these were status symbols. Tulips were the really, really cool status symbols of the day. Now, you might be like, why tulips? Well, you know what? Why anything? Why sneakers? Why hats? Why in the world is it that a hat with the tag still on it is a status symbol? It makes no sense. No status symbol makes sense. Each culture and each generation kind of decides its own status symbol. And for the Dutch, and it still is today, tulips were the thing. But now here's where we're starting to get to bubble territory. People would buy and trade in tulips with no intention of actually planting or using the tulip. They were what we call speculating. Speculation is when I buy something not for the intent of actually using it or eating it or doing anything with it, but because I want to immediately sell it for a profit. That is speculation. Day trading is all speculation, right? So if I'm investing in a company because I believe in the company and I want to give them my money so that they can invest it and do great things and I can make a return, that's investment. Speculation is where I just think, I think this is going to go up in value in 3 days. I'm going to buy 20 of them now and then sell 20 of them in 3 days. Straight speculation. Well, so that's going on with tulips. Then they started to stockpile. Then, we're getting more and more inventory. The rarity is dropping. Future contracts during off-season. Well, you see, here's the thing. Tulips only have like a 3-month blooming season. That's why it's a big deal when out at Thanksgiving Point they have the tulip season, which they're probably going to have to skip this year. And so it's a relatively short period, but they would buy and sell and trade tulips during the off season. There was no regulation to this. And so what people were doing, and I'm not kidding, and this happens all the time, people would take out loans in order to buy a tulip contract and then sell that tulip contract to somebody else. Well, what happens is the value of these things, the market value is way above the actual value. You've got tulips selling for literally a year's wages. One tulip bulb selling for a year's wages. Well, eventually the market kind of looks around, wakes up from its hangover and says, holy crap, what have we done here? And then there is a rush to sell because people are looking around going, this is nuts. There's no way this market is going to sustain itself. And so everybody starts selling. And when that happens, the price drops precipitously. I mean, instantly. The price just disappears. And so then you've got panic selling and you've got everything going and the bubble bursts. And here's the thing, folks. People have mortgaged their home to buy and sell this thing that is now worthless. So everybody's in debt. All money has lost its value and the economy is in a shambles. That is a classic bubble. Now, you might be going, okay, tulips, fine. Comic books, fine. No, this stuff happens a lot. So let me share a couple stories with you. All right. First, both of these have affected me and my family. I have a direct story with each of these. First is the dot-com bubble of 2000. Most of you are too young to remember the dot-com bubble, but here's the thing. This internet thing, it hasn't always been here. It's like mega new. And when the internet first came along and the web, the World Wide Web, these .com started to come along, everybody wanted on the bandwagon. Everybody figured this is the future of making money. And well, hey, if you're Amazon or Google and so on and so forth, you weren't wrong. All right. But here's the thing. Everybody and their frickin' dog had a .com. And everybody was just dumping money and money and money into the whole infrastructure of .coms. And business plans were being approved and venture capital being pumped into it with a one-page business plan. I mean, the most harebrained ideas out there were being funded because nobody wanted to miss this train. Well, it doesn't last. Now, let me show you this chart right here. Okay, you see this bad boy right here? Now, you notice these two charts look very similar. This is the fingerprint of a bubble burst. Remember this fingerprint. It's going to matter here in a moment. But this is the value right here of Intel stock, Intel Corporation. The value went up, 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 and there were all kinds of stock splits in here. This red line right here, that marks the day that I was recruited and hired with Intel. Now, mind you, on that day, I didn't, hang on, didn't mean to do that. There we go. On that day, I didn't know that there was a .com bubble. I didn't know all this was going to happen. All I saw was all this up stuff. I kid you not. The day that I was hired on with Intel and they gave me a whole bunch of stock options, I did some math and I figured that if the stock continued to do what over the next 20 years, what it had done the previous, 10 years, I would be able to retire a multimillionaire at the age of 55. Now, for those of you playing at home, I'm 50, I think I'm 53 now. I'm not retiring a multimillionaire because this bubble burst. And when it burst, that's Intel, but the whole economy that was rooted to this .com bubble just fell apart. And so, as a result, I'm still going to be working for a while. It's all right. I like what I do. But you see, that's a burst. Now, here's a more recent bubble. This one you may remember, the housing bubble of 2015. Now, if you've been in Utah your whole life, you've heard of this bubble, and maybe you know some people that were somewhat affected by it. Utah is a kind of cool state in that the highs don't get too high, but the lows don't get too low. We're a pretty even-keeled state economically. But there are some regions in the country that took a frickin' bath on this. Once again, you see this fingerprint. The value of the stock of the property, of the home in this case, goes up, 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 and then all of a sudden, boom. Now, if you're really interested in this one, watch the movie The Big Short. The Big Short does a pretty good job of explaining a very, very complicated speculation bubble here. Now, what do these lines have to do with? Well, this line, this green line, is when my father sold his $1 million bed and breakfast in Telluride, Colorado, had $1 million and took out another $1 million or $2 million loan. I don't know, loan of money. Took out another loan and built a luxury home in Telluride, Colorado. We're talking mega luxury mansion he built with his own hands. It's a thing he always wanted to do. He had a lot of money. He always made good money in real estate. His whole life, he's made good money in real estate. I grew up in Palo Alto, California, folks. That tells you how good he was at making money in real estate. So he builds this multi-million-dollar mansion in Telluride. This red line, that's when it went up for sale. Well, check this out. The housing market plummeted, just evaporated. He could not sell the home. And I'm going to turn down the gain there a little bit. I see that I'm getting too loud. Here's the thing. He built this home, but he couldn't sell it. it was too expensive. The market was falling out. And what ended up happening is he had to sell the home years later at a significant loss. Significant loss. And that really hurt. Now, don't worry, he's doing fine now and everything. He's living the retirement he's always wanted to live. But if you want to know what that retirement is, come ask me later and I'll give you details. You'd be a little surprised. Let's just say he's not living in a mansion, but that was never his intent. Anyway, these bubbles happen today. Okay? Now, I want to share with you the latest bubble. This is Bitcoin. I've been doing this little thought experiment with my students now for a couple of years. I started back in July of 17. Bitcoin was trading at 2,000. And I asked my students, would you like to invest? And they'd say, yeah. Well, then in July of 18, a year later, it's at 8,000. Now, those who invested at 2,000, would they have made money? Yeah. So I asked my students, do you want to invest at 8,000? And they're like, yeah, I feel bad that I missed the boat, but at 2,000, but look, it's going on and on. Okay. So then it shoots up. And then it drops down to 3,000. So had you invested 2 or 8,000 up here, you could have sold it for like 13,000. And you're like, oh, I missed the boat. I missed the boat. Okay, it's at 3,000. Well, would you invest today? Well, you might go, that fingerprint looks kind of familiar. That looks kind of like a bubble boom and burst. I'm not sure if I would invest. Okay, well, that's December 18. July of 19, it's up to 12,000. All right, well, check this out. Today, $6,700 is where Bitcoin is right now. Now, two things. Well, a few things. First of all, notice that is bubble fingerprint. It's actually 2 bubble fingerprints, right? People are having a hard time kind of wrapping their minds around what this is going to do. Second thing is, remember, this is all speculation. It's all speculation. People don't use Bitcoin as a regular currency. Now, yeah, I know there are a handful of companies that will accept Bitcoin as some form of payment. I actually did some research about this morning, and yeah, there are a few companies that will, even some big companies. But the process you have to go through to actually exchange Bitcoin for goods or services is heinously complicated, and companies kind of go back and forth on whether or not they'll accept it for certain things or not. The point is, 99.999% of all the buying and selling of Bitcoin is all speculation. Nobody intends to use it. They just want to resell it. Classic bubble. Okay. Why? Why does this happen? Well, we hate missing out. We want to be rich. We want to be well off. We want to be able to, benefit from these booms, but we just, hate missing out. And when we see everybody else doing it, we totally want to do it. We totally want to get in and go for it. So it's really easy for kind of mass hysteria, if you will, to kick in and for folks to want to jump onto these bandwagons. And it happens all the time. Some of you might even be into retail arbitrage in buying and selling shoes. Buying and selling shoes is kind of a big thing right now. Well, you probably have some stories of where you bought shoes too expensive and you couldn't resell them, and some shoes became faddish and then disappeared. Happens all the time, this sort of bubble. Okay, that is Tulip Mania. So when it comes to the main reading for this week, your all set to kind of read it, absorb it, check out those videos, kind of contemplate things like that. Okay, couple quick little things. One, for my class, okay, for Lon Schiffbauer, my class, don't worry so much about the Marco Polo reading. The Marco Polo reading is interesting, but I kind of feel like if we were going to go over it, we should have gone over it toward the beginning of the semester. It really just talks about the fictitious nature of money, and we've already beaten that horse. So don't worry about the Marco Polo reading. I'm going to take care of you when it comes to those questions and so forth. Don't worry about that. When it comes to the romancing of the busy broker. All right, I'm going to first tell you the punchline, right? If you're interested, all you need to do to read that, to understand that, is read the last little bit. I kind of feel like it's one of these stories that kind of goes on and on. It's like a cautionary fable with a how do I put it, Twilight Zone twist at the end. It's a long, drawn-out cautionary fable with a Twilight twist at the end, and it's supposed to be one of these sort of, oh, it blew my mind, those sort of things. Whatever. I'm just going to go ahead and tell you the punchline. The broker was so busy that he forgot that he had gotten married. All right? So read the story. He married his secretary, but he was so busy that the next day he had forgotten that he married his secretary. Okay, cute, whatever. Here's the thing, though, folks, and this is what I do want to offer up. And here we go. If all you're interested in is knowing what is in the test and for the module and so on and so forth, you can drop, all right? But I would really like to offer you some pearls of wisdom about how to have a thriving life at work. Because this whole cautionary tale thing of don't be so busy at work that you miss your own wedding, or you miss your kid's soccer game, or you forget an anniversary, so on and so forth. It might be kind of a weird little cutesy tale, but the message behind it is dead on right. Companies will use you, abuse you, chew you up, and spit you out before you can say boo. Now, that sounds pretty awful, and it sounds like really socialist and so forth, but I'm telling you, this is the case. This is how capitalism works. It's the survival of the fittest and so forth. And the company is not interested in your well-being. You need to be interested in your well-being. But they are going to try to trick and manipulate and coerce you into thinking that you need to be the loyal employee and that you need to sacrifice your time and yourself and your family for the good of the company, to be a good corporate citizen. Now, sometimes you will. Sometimes you should. Sometimes I hope you do. But you really need to think about it deliberately and methodically when you do. So, okay, let's jump into this. This right here, I wrote a book called The Courage to Succeed, Discover and Achieve What Matters Most, and Tell Everything Else to Take a Hike. I am not pitching my book. What I am doing here is I'm going to share with you several principles, 9 in fact, that I discuss in the book that answer this question: why are we driven to work constantly? And how is it that companies take advantage of this? So let me rephrase that. There are many psychological drivers that drive us to work constantly. Companies know this, and they will take advantage of it. So let's explore what these are. All right. First of all, the profit motive. Now, you all know about the profit motive, so I'm not going to go into detail here, but simply, since we can never get enough, we can never stop working. Since a capitalist system, which I love and adore, don't worry, I like my capitalism, but that doesn't mean we shouldn't call out its warts, just as Adam Smith did. Since we are driven to constantly progress, constantly move forward, constantly improve efficiencies, we are driven to work. It's just in our nature. And companies know this, and they will constantly try to tantalize us with little profit motive carrots, right? If you work a lot, you're going to be seen by the manager. You'll be identified as a good company person, a good corporate citizen. You can work for that bonus. You can work for that commission. You can work for that new promotion. There's all kinds of things that you can work for, all driven by the profit motive. And the company says, yeah, I know how to take advantage of this. Next one. The Protestant work ethic and idleness. Once again, we talked about this one. If you have grown up in the United States of America, you have grown up in a society absolutely steeped in the Protestant work ethic, which means you've been brought up in a society that has a very, very dim view of idleness. And once again, companies take advantage of this. A company would much rather reward you for over-engineering a simple task so that it looks complicated and takes more time than reward you for getting a 8-hour task done in 6 hours and leaving early. Now, I want you to think about that, all right? If a company gives you an 8-hour task and you do it in 6, and it's a wonderful outcome, you're efficient, you're good, you're skilled, and so forth, and you leave early, first of all, you're giving up 2 hours of pay. Second is you're probably going to get chewed out for leaving early. On the other hand, because of the Protestant work ethic, if you take an 8-hour task and make it look really difficult and really hard, and it just is, crazy, and you end up staying late and working 10 hours to get that 8-hour task done, and you're the last person to turn out the lights, you'll get a reward. They'll give you recognition. Oh, look at this person who stayed late to make sure that the T's were crossed and the I's were dotted and so forth. That makes no sense from a capitalist standpoint of efficiency and efficacy, but it makes all the sense in the world when you think about the Protestant work ethic. Companies will try to use this. Okay, next one. We want to have it all. We want to have it all. I mean, come on. You want a house, you want a car, you want 2 cars. You want those really nice golf clubs. You want that awesome makeup done by Star, right? You want to travel. You want to have really nice clothes. And we have been trained as a people to say, you can have it all. You can have it all. All you need to do is work your ass off. And we do. We work and work and work because we want to have it all. We work hard in college because we want to have a good career. We work hard in our career because we want to get that promotion. We work hard at the latter part of our career because we want to have a retirement. And then when we retire, you die. Okay? All of it has been grasping for these things that we've wanted that ultimately, do you really need it? It's just like Galbraith said in last week's readings. These are contrived needs, contrived wants. You don't really want it. You don't need it, but we think we do, and so we work for it. Companies take advantage of this. Okay, the paradox of abundance. Here's the thing, is there is so much out there. Well, which one do you want? Oh, I don't know. I'll get this. I want that, and so on and so forth. And so we really struggle, even though we have like this infinite supply of possibilities, we struggle with making a selection. And here's the weird ass thing, people. First of all, if you have a whole bunch of options, it takes you longer to choose which one because you have to assess, analyze, and weigh all your options. And then the second thing is, and many studies have backed this up, when you finally make your choice, you are less happy with your choice than somebody who only had, say, 3 options. So here's the thing, if I only have 3 options, it's really easy for me to, well, this one isn't going to work at all. So now I have 2 options. Okay, well, 50-50. I choose this option. And the studies say I'm going to be happy with it. Whereas if I had 30 options, studies say that even after I've chosen, I'm constantly reevaluating my choice. I'm always thinking, what if? Should I have chosen something else? Which means we feel like we need to constantly work to fill this void in us that's saying we're not satisfied with what we have. Surely there's something else out there that would make me happy. Companies know this, they take advantage of it. Okay, fear of missing out. Oh, this one's big. FOMO, right? We're trained to look for and pursue every possible opportunity. And so what we do is we're constantly working and doing this and trying that. And we're doing these little side gigs over here. And we're exploring this career over there. And we're taking these classes here to try to make something happen here. But I really want to be a writer, so I'm writing over on the side, and we're just afraid of missing out on an opportunity. Now, this becomes especially big in the workplace. Remember, I'm telling you how companies will manipulate you to get you to work. They will always offer you opportunities. They'll offer you projects. They'll offer you, and you don't want to say no. You don't want to say no because, first of all, you don't want to say no because it puts you on that list. You don't want to be on that list. But also, that project might open up an opportunity. The chance to work with that team might give you a chance to grow your career this direction. When you get into a big career position, this fear of missing out causes you to take on all kinds of work on your plate, more work than you can really accommodate, but you're afraid of missing out. Okay. The irony of wealth. All right, here's the thing. Have you ever heard, the greatest 2 days of my life is the day I bought my boat and the day I sold my boat. You've worked hard, you've earned all this money, so you're buying toys, you're buying things. Well, here's the thing, guys. All this stuff that you've bought requires maintenance, serious maintenance. I own this home. Every weekend, this is not an exaggeration, every weekend I'm working on the house. I'm either doing home improvements inside, I'm doing repairs. We just repaired two water leaks. We just turned on the sprinklers. We have to repair some sprinklers. Now, of course, the grass is growing. I have to mow it and so forth, and you have to weed it. And then the cars, you have to work on the cars. I've got this issue with my car that I need to get taken care of. It has an oil leak, yada, yada. Everything you own requires wealth then to maintain. And the more you own, the more you have to maintain. So the weird irony of this is that the more you work, the more you can play. But the more you play and own, the more you have to invest in that to maintain it, which means the more you have to work. Okay? It's the old thing of, oh my gosh, I can't use this client. I just bought a boat, right? So we end up having to work harder because we worked hard in the first place. Companies love this. Okay, number 7, hard to say no. We touched on this before. We're really kind of trained to never say no, because if you say no, you're put on the list. You're put on the person who isn't willing to lay down on the wire for the company. You're put on the list of the people who are not willing to sacrifice themselves and to be a team player and to contribute when the going gets tough. And so we really don't want to say no. We've been trained that you don't say no. Number 8, being busy. It's a great place to hide. Okay. If you're 22 years old right now and you're just working a part-time job, screw you, Lon. No, I get it. You're working a part-time job. You're going to school. You have your obligations. You're busy as hell. I get it. I apologize. Later on, though, you are going to be working a full-time job, working 60 hours a week. You're going to have a family. You may have kids. You may have a family. You're going to have all kinds of obligations. You're going to have all kinds of responsibilities. And all these things weigh on you like you can't believe. Work is a great place to hide. It really is. You see, here's the thing. At work, you have some level of control. I know it doesn't feel like you have some level of control, but trust me, you do. You kind of control, your relationships, and, there's rules of the road at work. There's this work culture. There's policies. There's expectations. There's kind of, these lanes that we can stay in at work. At home, there's no damn lanes. There's no control. Kids go nuts. Everything's falling apart. Everybody's an autonomous being. There are no policies, no corporate culture, and you're kind of screwed, right? And so we end up spending a ton of time at work just to escape. Guys, I love my job. I love my family. I love everything. But I will tell you, there have been Sunday nights where I've thought, oh, I'm so glad tomorrow is Monday. I need to get out of here. Companies love that. Okay, last one. We like it. We like being busy. It gives us the sense of self-worth and martyrdom and just look how busy I am. Look how important I am. I hear this crap from fellow faculty all the time. They brag about being behind on their grading. The hell? What are you bragging about being behind on your grading for? Because it's this. It's that martyrdom. It's saying, I'm important. I'm busy. People are relying on me. And I have so much responsibility that I am behind. I cannot tell you how much I loathe this. When somebody starts to wave their cape of busy in my face, I come unglued, okay? But we love it because society rewards this. In a Protestant work ethic, capitalist system, we reward people that are busy. And we like it. And companies love this. So here's the thing, guys. Companies know all these tricks. Now, whether they know it consciously or otherwise, they know them. And they use them all the time. When you go to your manager and say, I'm going to have to leave a little bit early today, they don't go, okay, cool, we'll talk to you later. They're like, well, I suppose if you have to. Oh my gosh, what the hell's that crap, right? This is all part of the work system and ethic that drives us and controls us. Now, I want to be really clear. I love working. Working. I do it all the time. I build my frickin' home around it. Okay? So I'm into this. I really like it. All right. But you got to be conscious of it. You need to be aware of it. You need to make your own decisions because, as I say here, if you don't think for yourself, others will think for you. And employers will be more than happy to do your thinking for you, your prioritizing for you. And as a result, you'll be 50 years old and your kids, you've never gone to one of their soccer games, you've never taken time to go on vacation, you've never pursued a self-actualizing hobby because you've spent 80 hours a week in the office, and at the end of the day, at the end of your life, you get a gold watch and an underfunded 401k. Now, I'm painting a bleak picture. It's not really that bleak, but it can be if you're not careful. So be careful. I want you to be happy and thrive in your work life. And so look out for these things. All right, everyone, thank you very much for joining me. That is everything that we have going on. There are actually some people still with me. Wow, none of that was on the test. So thank you. Thank you for sticking around. What I will do, and if I can get my chat box up, hang on. Let's get properties, and I'll go ahead and come over here. And let's see, is it that one? Yes, it is that one. It's open. If you have any questions or comments or anything you'd like to add to this, I'm here. I'm going to stick around for a moment. Otherwise, folks, we're all set, and I hope you have a fantastic day and week. We're on a Monday. So let me open things up for questions here. Any questions? Let me do this. Any questions? Anna says, thanks. Thank you. Here I am pounding on my desk, and it's like, Lon, we can hear that. It's, yeah, not annoying at all. Okay. Okay, Nick. Hey, thanks a lot. I really appreciate that. I do. This is real stuff. This is the rest of your life. Give it some thought. We'll see you later. Okay. All right. I'm not seeing any questions come in, so I'm going to go ahead and wrap this up. Guys, we'll see you in texting, email, and Canvas. And until then, we'll talk to you next week. Have a great day.